Well, welcome here to the Grain Navigator here. We'll be talking a little bit about the markets, what we saw a little bit during the summer. We finally have a little bit of information coming in so we can take some educated guesses here on what is going to be coming down the pipes in the next 6 months. This is going to be really valuable, guys, as we learn about some supply and demand and other things about the grain markets and how to go forward in 2021. So with that, let's start this presentation. First thing you want to do is you go to the website there. There's a link down below, and just click if you want to download the PDF, and you can download that and read that if you want. So anyways, we'll continue on. So the executive summary here is things are starting to trickle in, all the knowns that we know. Before in July, nobody has a clue what's going on. We knew it was dry, but other than that, we didn't really know. Now we got a bit of information coming in. So it's time to start making some wise marketing decisions. Globally, grain production will be smaller than originally predicted. And in my opinion here this year, the biggest influences of our commodity prices in 2021 and 22 will be political, the financial market, logistics. We're seeing a lot of supply chain issues here, guys. And fundamentals are still important, but I don't think they're going to be as important as the political markets and the financial markets, right? So the theme this year, we've seen it last year a little bit, is going to be expect the unexpected. Overall market thoughts of what we see coming down the pipes here. Market risk for you guys is going to be the biggest factor affecting you in the next 60 days. During these times, it's really wise to remember what happened in 2008 when the market abruptly collapsed, right? And even more recently, if we look at the lumber futures, and I know ag commodities are a little bit different, but what happened with that, they went from 450, ran all the way up to 1700, and then crashed right back down to 450 in just a few short months, right? So what we're trying to say with this is fundamentals matter, but they don't matter as much as big money. Big money will push this thing any way it wants, right? So you don't want to be caught on the wrong side of big money, right? Right now, we are at generational highs, and that's pretty important. And it also means the risk factor is way larger than we've ever seen before, and volatility is here. We've never seen this kind of movements in the market on a day-to-day basis. So extremely volatile. At this point, it's all about risk management and finding that balance between profit and speculation with prices where they're at. At what point do you pull the pin and which point do you shoot for some more money, right? So we got to discuss that. So let's start talking a little bit about canola. My personal sentiment on the canola is I'm an extremely cautious bull. There's some things out there in the world that would cause us to market probably to rally a little bit, but at the same time, with the soybean market coming down on the pipes here, it could be very scary for the market to rally up much more. So last year, the world produced about 71 million metric tons of canola, of which Canada produced about 19, which is roughly about a quarter of the global production, right? In 2021, Canadian canola production is going to be closer to 15 million metric tons. Now that's what they're saying. I think it's actually going to be a little bit smaller if you're reading what is happening out there in Canada, right? So time will tell, right? And we've added a lot of crush capacity. They have to deal with that, right? So that's just one thing why we're cautious bulls, right? And this means a lot of other countries are going to be scrambling to find canola, or they're going to be going to a different type of vegetable oil. Now, we're not quite sure how much countries absolutely need canola oil, but I'm sure it can be substituted with, say, coconut oil or something like that. So that's a very bullish scenario, right? The market zoning and timing, at this point, there's a high probability of us seeing $1,000 per metric ton on the futures like we did in the spring on that canola. So if we see that, that's the time to be doing something for sure. We don't know when this is going to happen or if it's going to happen at all, but there's a high probability of that, right? However, what happens if the market has already priced in the absolute worst case scenario and the market doesn't rally, but it drops? We've seen that happen before in other markets, right? So that's a real question we have to ask ourselves, right? We could easily make the case for canola to go right back down to $13 or right back up to 30. I mean, you just cherry pick the data you want to do and you can do whatever you want with it, right? So we got to realize that, right? So the number one marketing decision a farmer can make this year is deciding how much he is willing to risk and then figure out what you need to sell and what you need to hold back, right? So in our risk to reward management, we always talk about this, is the real question is, why did canola go to $20 in the first place? It's an important question to ask. Fundamentally, we were slightly bullish last year going into this thing. We thought it would probably hit $12, maybe $13 at the best case scenario, but the market just blew past that. It went to $20. Why was that? And once I can answer that question, you might be able to figure out when you need to market stuff, right? So how much of this rally that we saw, of the $20, was genuine fundamentals, right? Consider this, perhaps fundamentally the market this year that we're seeing right now is only really justified for $15, and that means the other $5 is pure speculation of big money. And when we see that, the market could drop, like say $5 a bushel in 2 seconds. So that's something we really want to always think about right now. Even though on the farm, and we talk to everybody in Canada, it looks really, really bad. If it's all priced in and there's speculation and they decide to get out, boom, gone. The money is gone right away. So as we go down the pipes here, and I've been watching this market on the technical range of things, I fundamentally think the price range this year should be around that $720 to $880, which is in that, $20 at the topper end, maybe a little bit greater than that, and down to that 15 or so. So I think that's fundamentally where we need to be this year, just because of the production that we saw, right? In the spring, we did see canola rally tip to $1,000 a metric ton, and last year it started around $440. I don't think we're going to double this year and go up to, say, $1,700 in the canola. That would be crazy, and unless there's a mega drought out in the States with the soybeans, right? But right now, canola is at $860, which I think it has potential for the upside. Like I said before, potentially could hit $1,000, but it could also drop down to that $720 on metric ton, right? Which is around $15 or so, right? And of course, you can't talk about canola without talking about the U.S. soybean crop. Right now, the U.S. soybean crop is looking pretty good. It's on course to be about 118 million metric tons, which will be the third largest ever. You got to remember that, the third largest ever. So that's 6 million metric tons bigger than last year, and 22 million metric tons better than 2019. So that really could play havoc into the canola, and that's one of the main reasons I'm a extremely cautious bull on the canola market, right? So what we want to do is think about the smart contracting going forward. How much are you willing to risk? Quite frankly, if you don't know what you're willing to risk on this canola and just going to throw it in the bin and lock the doors and see what happens, you should probably sell everything right now. Just because the price is so great and we just don't know what's coming down the pipes. Now, if on the other hand, if you say, look, I'm willing to risk quite a bit, I'll sell everything at $25 and if it doesn't hit there, I'll be happy at selling at $15. Then all the power to you. Keep everything in the bin, right? That's what you got to really determine. Think about your risk profile, right? There's nothing worse than a farmer being upset when he missed the top, right? At these current prices, there's a whole new set of factors that need to be considered. In fact, everything that we see is actually really magnified. Our storage risk becomes magnified. You know, from before it was like $10 and it heated, it went down to $2. And nobody's happy about that. But now all of a sudden it goes from $20 down to say $3. Nobody's happy about that. Like, just think of the magnitude on the storage risk there, right? The volatility is huge now. We're seeing daily market swings of easy 50 cents a bushel. Those were swings that you used to see in a whole year. One really neat thing here, what we're seeing is the buyer is more willing to participate in the market. And that means that you have the ability to use targets a lot more, right? So what I would say on smart contracting, the smartest thing to do right now is to take the majority of your canola, sell it at these record prices, keep back a percentage that you're willing to speculate with, right? And see what happens with that little percentage you're keeping back. But sometimes you just got to pull the money off the table and be happy with what you got, right? Because we just don't know. So the current trends and looking ahead, at the end of the day, this is an unprecedented market. Nobody's really seen this thing last this long at $20. There is potential for the thing to rally even higher. But there's also the equal potential to drop right back down to where it was in previous terms, right? Or previous times. There's simply so much happening in the world right now. It's actually, I would almost say, it's impossible to predict what kind of trigger event is going to move this market up or down. And that's the key here, guys, is these trigger events that we've seen in the world, it can move this market huge. And it doesn't matter if it's the canola market, oil market, stock market, currencies, anything can happen in today's world, right? So that's honestly the situation. We got to really just not keep our heads in the sand about what happened in Alberta or what happened in Saskatchewan. Globally, this is a big situation. So just look at this quick 5-year chart on canola. Previously, canola bounced between $440 to $550, which is around $10 to $12 or so. Now it's rallied itself all the way up to $860 range, and that's very significant. So if you're following the Fibonacci numbers and retracements, 880 is 1.6 times 550, which means our new high would be a reflection of our old high, and that would be 880, which is around that $21 or so, right? That is the potential. Now, we don't know if this is a whole new trading range of canola at 720 to 880. We need to see this thing hold there for a little bit and see if it's going to work itself out. If it doesn't hold, the market is going to drop straight back down to 550. It's just the way these things work. Unless we've hit a new long-term trading plateau. So here's the bigger picture here. As you can see, this is where it's at. It was always at 440 when we saw that for years and years and years. And then it would jump up to 550 with a higher range, which is around that $12, and it just blew past that. That's probably why most people never really thought this market was going to go above $12.50 or so, and nobody thought it would hit a new plateau on the trading range, right? Moving forward, you guys want to decide on exactly how much you're willing to speculate with and then keep it back and then sell the rest. Take all that risk off the table and let somebody else deal with it, right? That's good marketing. 2022 crop, I know it's a little bit early for seeing that, but at this particular juncture, if you saw $1,000 per metric ton then why not do a futures only contract? I mean, the basis would be huge, but $1,000 a ton was pretty good, right? We're probably not going to see that unless we have another wreck next year. So wheat, we're going to talk about wheat now. My sentiment on wheat is bullish. I do believe that there's opportunity for wheat to rally upwards. On the world stage of things, I think there's more issues than anybody's letting on. Spring wheat in Canada and the U.S. is a complete disaster. Last year, Canada produced 35 million metric tons of wheat. In 2001, that's this year, The official number is 24 million metric tons, and I really think it could be quite a bit less than even 20 million metric tons, right? So we just have to wait and see. The USA, they've got their official total wheat numbers. That would include their winter wheat, is down 3.5 million metric tons. Russia is down. Australia is down. Everybody's down. And, for some reason, China is up 1.7 million metric tons to 136 million metric tons, and they keep that number pretty stable. But if you're paying attention to what's going on over there, there's some massive flooding going on, and it hit some of their crop growing areas. Some people are saying it could be more than 10% of their crop completely wiped out, like their total crop. I'm not sure about that because obviously they're not telling anybody nothing. But that's just kind of putting the pieces together, right? The only region that is said to have better crops is the EU, which is stating an increase of 12 million metric tons. So that's still not even really helping things too much. So as we go down the pipes here, much of this data is actually quite inaccurate right now because harvest has just basically started in the northern hemisphere. So one thing we do want to do this year, because we're still bullish on this wheat, and why are we kind of bullish? Because it is a La Nina year. It did exactly what we kind of thought it would do. It turned, good spring, then a hot summer, and then it's supposed to be a wetter fall is what it's supposed to say. But this was kind of like that textbook thing of what they said was going to happen, except it was magnified by quite a bit this year. So we can just assume maybe a few things here that maybe it was like 2011, and then it maybe this year in the marketing side of things we might see some similar properties, right? So let's kind of assume that, and that might help us with our marketing thing because we're looking back at history, and maybe there's some history's rhyme in there a little bit, right? So in 2010, global production was 688 million metric tons. In 2012, that's the following year, it was 650 million metric tons, which is roughly 5% drop in global production. So if we saw the same thing happen this year, a 5% drop, not a lot, we would go from 776 million metric tons all the way down to 737 million metric tons. And I think that's actually quite a bullish number because the wheat crop is actually getting smaller, right? So everyone's going to get freaked out about wheat. Prices will rally. And what I noticed when I was looking at a few charts here about the previous La Nina years, what it suggested was the prices topped out near the end of the calendar year, which would mean sometimes near November, sometimes November, December, early January. I guess that's probably because the crops are starting again in February, right? So if this is La Nina year repeats, there is some serious upward potential from where we're at now, and that's from looking at previous charts. And what I kind of figured out was it looks like there's potentially $2 a bushel potential. Now we weren't able to capture that last time of that because of the wheat board. Perhaps this year we'll be able to. And this would mean CPS wheat could maybe go as high as $12 at the elevator, so it's a significant increase. And hard red could even go as high as 14. Now this is maybe the upper limits, but you never know in this market, right? On the future side of things, there's a pretty good chance that Kansas wheat, and this is what I looked at on the La Nina year, is Kansas, because I think that's a better reflection of wheat, just that we grow here. It did hit the $8 mark, which would mean with our exchange and everything like that, we could see very close to $11, and maybe, which is probably more realistic than the 12 that I said before, right? So out of all the ag commodities we deal with here in Canada, I think wheat has the most potential to rally at this juncture, right? And I don't really think there's much of a rush when it comes to contracting wheat right now. You're probably more concerned about canola or barley, and we'll see that later on. I just think there's a higher reward potential on wheat than the other commodities. So smart contracting with wheat, once again, targets are going to be your best friend this year. Elevators are going to be willing to participate. I mean, there's nothing wrong with selling half of your wheat crop at, say, above today's price. Throw a target in at $1 above, right? So like it'll be $11 CPS, $12.50 hard red. See what happens. I think we got a little bit of time on our sides, right? And you could just wait on the remaining amount and see what happens. See if the market reacts as the same as it did in 2011, which would mean we see a significant increase in the winter crops. Now, we don't really know how that's going to play out yet, but there's nothing wrong with $11 CPS wheat, in my opinion. The current trend and looking ahead, wheat is very bullish, and I think this trend is likely to continue. Some of you guys who've talked to me know that I kind of refer to wheat as the crack cocaine of ag commodities as far as a demand curve. When you think about wheat, you think about basically a vertical demand curve, which as soon as somebody gets freaked out about wheat supplies dropping, they all get worked up about we're all going to run out of food, and then the price shoots up pretty fast and pretty high compared to other commodities because it's there's a big psychological level on wheat opposed to, say, soybeans or corn. Wheat is always considered bread, and that is has a significant psychological impact on the price of wheat, right? So we saw that previously in the years, the market should peak out in mid to late winter, but that again depends on what's happening down in the southern hemisphere, of course, right? And how their crops are coming off. So here's a chart of the Kansas wheat. As you can see, it's a 20-year chart. 2008, things went crazy. It went to $13. I don't think we're going to see that this year. But in 2011, you can see it went up to $10. And 2012, 13, I guess, in the winter went up to 9 something, right? 9.50 or so. And right now we're only at 7 something. So that means the market still has potential to rally up. That's why I said there's a potential for it to hit $9 if it's a repeat of 2011, 2013. And I think that could happen easily in the winter months. So time will tell on that. So next thing is barley. Now this barley here, we have seen an incredible rally on barley in the last year. And for this reason, I'm a little bit neutral to actually slightly bearish on barley. And you'll see why. I think a lot of these prices are already priced in on barley. I don't know how much higher it can go. There's no doubt that world production this year on barley is down. So that you would think that would be bullish, right? In 2020, last year, there was 160 million metric tons. This year it's supposed to drop to 149. So basically, it's lost 10 million tons. So European Union's down, Russia's down, Australia's down, Canada's down. The only people who are up are Morocco and Ukraine. So that might be able to take a bit of the pressure off. So the market zoning is, even though production is down, I'm slightly neutral, or I'm neutral to slightly bearish, and there are a few reasons for this. The price is already at all-time highs, which is double from last year. I think that the export malt programs will not be adding on new additional sales this year, as supply is extremely tight and fulfillment risk is too great. So we're already seeing that right now. The elevators, they put a lot of sales on last fall and last winter on barley, and they were expecting to get it. This year they're scrambling to make up for their lost sales, right? Or the drought that happened, they're scrambling to buy it all in, and that's why the price is going to stay strong. Anyways, it's going to stay strong. One thing we got to realize is multinational companies have the ability to source their grain from all over the world. And that's one thing we want to remember. Just because it says it's come from Canada, it could come from the Ukraine, right? And there's also still that little fight with Australia and China, and that could get resolved too, right? I do think that the U.S. corn is going to put an upper limit on Lethbridge barley price. Now, the U.S. corn crop this year could be the second largest on record. That's huge. If that does come to fulfillment, there is going to be a lot of corn coming into the into Canada, and I think that's what's going to keep a cap on our barley price, right? Prevent it. But if there's a wreck on the corn crop, well, who knows? But they haven't even started harvesting yet, so we'll wait to see. And cattle and feed, I don't really know what's going to happen with that, with all these high prices, and how does that change our current prices on that, right? So something we got to consider. Risk reward management. Right now, the risk for lower prices increases substantially as the end user fills up his contracts that he's already made. There was a whole pile of export contracts made, malt contracts, and some feed contracts, obviously. And once those get completed, like I said before, they're probably not going to put a lot of new stuff on the books until they at least have some more knowns in place. So I would suspect the demand for the export programs are going to be reduced. That's my gut feeling, right? Essentially, barley demand is going to stabilize to meet that supply that we currently have, and it's going to be quite a bit smaller than we had last year. So it doesn't necessarily mean that the barley price will drop drastically. It just means a significant rally is a long shot. So even though like a feed price right now in this area, central Alberta, southern Alberta, is around $8.50 a bushel picked up in the yard, malt 9.25. It doesn't mean that that price is necessarily going to come crashing right back down. It just means that we're probably not going to see a $2 a bushel gain on the barley. Maybe we see a 50-cent gain, but probability-wise, it's probably not a large gain on the barley because we've already saw that in previous times. So that's why I say I'm pretty neutral on that barley, right? And so that's why one reason I think the downside risk is much higher than the upside, because I do think that demand for everything is going to get eroded pretty quick once everything is completed. At this point, $8.50 barley, you're making some serious good money on barley if you had an okay crop, right? Just sell it into the cash market. One thing we got to be really, really careful now is, and I have it in red right there, is FOB pricing, farm gate pricing, actually almost all pricing right now. You guys should really make sure you're dealing with licensed and bonded companies. I have it as a must. We've already saw one company this winter go broke, and at these prices, you almost got to double your operating loan, right? And you just don't know how this is going down the pipes. If someone doesn't get paid, what happens? So, don't be looking for the extra 2 pennies. Look for safety at these prices, right? And I say one thing is load by load payments is a must, or at the very least weekly payments, right? You don't want to have $200,000 worth of grain and the company goes under, or feedlot goes under, and you've got nothing. At least if you're licensed and bonded, you're going to get something, right? And if it's load by load payments, you've got some money in your jeans from the majority of your crop that's been sent out there and sold, right? So, and definitely don't go with any of this complete the contract nonsense before you get paid. Just make sure you guys get paid. I'm just seen this lots. Anyways, and another thing you guys have to do on this FOB pricing stuff is, because this year we could have a lot of light grain out there, take samples when loading trucks. It's just smart. And if you have any questions, it's probably best just to give me a call and find out the details, right? I'll help you, walk you through every single contract there is. Current trends and looking ahead, barley is currently at all-time highs. I don't know anybody who's seen these barley prices for this long, ever. I know right now there's like the smallest slight harvest pressure, but it's the smallest anybody's even seen. It's probably over by now. And malt prices are over $9 again. 2 weeks ago they were $7.50. Boom. I think price action on barley should be limited unless there is a problem with harvesting corn, right? That's a very important statement. Yes, you may want to store your barley. Is the price going to come crashing back down? I don't really think so. But is it going to rally way back up? I'm not super confident that it's going to go to $10 barley. I just don't really see that at this juncture. unless, like I said, we have a problem with corn, there might not be much of a financial incentive on storing barley this year. So anyways, let's talk about some charts and graphs. Obviously, a year ago was last year, and let's see what happened this year. This is an unbelievable year. From July 31st from 2020 to July 30th to July 2021. Corn was up well over $2. Spring wheat close to $4. Regular wheat, almost $2. And canola was up $350 a metric ton. So that's just crazy. Soybeans up over $5. Soy up 34 cents. Just oats is up huge. Canadian dollar, which who knows why it's up. Maybe the U.S. is so weak. Oh, it is. Look at that. The only thing that's down is U.S. index. Live cattle are up. Feeder cattle up. So basically this year, everything to do with the financial world was up. S&P was up quite a bit. 1,100. That's a huge amount, right? So what we're seeing too is this is a little bit of an indication of the financial markets are picking up here, and that's why I said earlier on that the financial markets are a huge risk. When the U.S. and Canada and everybody else is taking on the debt like they're taking and printing the money that they're printing, the money has to go somewhere, right? So just always remember that. Charts and graphs. So if you look at our monthly corn chart, it's gone way up, and she's starting to drop back down again. So it looked like the corn crop is going to be good. So there's no real reason fundamentally for it to rally way back up to those 2008 highs, 2012 highs. It just probably isn't going to happen this year. Soybeans, same thing. It already had a big rally, and now it's starting to drop off a little bit here simply because we're getting a good crop. And that's why I said before, I'm a very extremely cautious bull on the canola and neutral to bearish on the corn or barley, because of the corn. So the U.S. markets, the cross-hedging of those two markets are reflective of each other, and that's why I think the Canadian markets aren't going to rally huge amount. And then the wheat never really saw a big rally. It didn't double or anything like that until quite a bit later on, and it still hasn't really doubled. Because if it had doubled, our spring wheat would be at $14, right? So it might have a little bit of legs in here, and there was a problem growing wheat. So we can just say that. In conclusion, with this Grain Navigator here, I do think there's no question that this year's drought is going to play into the market. It's going to be a big influence this year, especially in Canada. We should see extremely narrow basis levels. If you guys aren't doing basis contracts this year, might be the year to do them for next year. There's going to be good opportunity in basis if you're paying attention. You got to time it right, and just give me a call if you have questions on basis. So that's one thing we should see. There's all kinds of things happening, right? Don't forget that the commodity prices are already at record highs. That's very important. Just because we had a drought or there's a problem coming down the pipes doesn't mean that the prices can go way higher. The market may already have that priced in. And if they do, the market's going to trend down. It's something really important to remember. I think in 2002, that was before my time, the markets peaked out in, I think it was August, from talking to people. So that could be a repeat of this year. We just don't know. There's so many things happening. But the main thing is you got to do is take the money off the table. And this year's probably not a great spec year, right? The real question is how high can these prices go, if at all? You should all sit down and think about that. How much higher can my canola price really go before they say, you know what, we don't need margin, right? Those kind of questions like that. Right now, the Northern Hemisphere the harvest is not complete at all, so anything can happen. You know, this could be a year where prices actually do double because all of a sudden the corn and soybean crop does not get taken off. That is a reality. So so there is potential for higher prices. The question is how much are you willing to risk? And that's the biggest question. And years like this, the best saying that all the old traders say is there's room for both the bulls and the bears, but the pigs always get slaughtered. And, you know, I see it on Twitter and everywhere else, like those guys are saying, I'm going to go to the moon here with this price. And it might not work so well for you. There could be a lot of farmers with very long faces come springtime. Let's remember that saying. And I guess what I'm trying to say is just don't be a pig. Take some money off the table, speculate, make sure your farmer is financially stable for next year. And so overall, my whole sentiment of this year is I would be a very cautious bull on everything. And that means you want to take some money off the table so that you can farm again next year. And if you're a cautious bull on this thing, you'll do fine. And if you have any questions, just